Federal regulators now looking to offload about $17 billion of debt?
Yeah, that's a pretty big amount. And the total amount that the federal regulators seized when Signature failed is about twice that, or $33 billion. So it is the federal regulators' job, the FDIC, to begin packaging and selling these loans. And toward that end, they've been trying to really find the best bidder. They've been marketing loans backed by retail, industrial, office and apartment buildings, and Bloomberg has learned from people close to the matter that the lead bidder for a portfolio of roughly $17 billion in commercial property loans is now Blackstone. And the sources say the FDIC officials are in the final stages of hammering out the deal, and also that Blackstone is said to be in talks to partner with Rialto Capital, which would ostensibly help service the loans. Now, there's been no official comment from Blackstone or the FDIC or Rialto, and it's important the people close to the matter are telling us to realize that such deals can be very complex, and while bank regulators are still hammering out the final numbers and terms of the deal with Blackstone, we understand the exact terms are not final, and also anything can happen in the final stages of this kind of deal. For instance, another bidder could emerge to trump Blackstone, but right now it appears that a big portion of the loans trying to be offloaded, a $17 billion portfolio, is in the final stages, and Blackstone appears to be the front runner.
So given the decline in commercial real estate values, how closely watched is this deal?
This is very closely watched. You have to realize that this is a bidding process that has lured in some of the top financial firms, not just Blackstone, but you've got Starwood Capital. You've also got Brookfield. These are major names in the business. And this is happening at a time when commercial real estate, particularly in New York City and many major cities, is really under pressure. That's as interest rates have been on the rise. That's pushing down property values. And it's also stalling out transactions. And so there is a lot of interest in just how big or how successful this offloading of the loans can be and the prices that they bring in. It's also important to point out that Signature had been a big lender to apartment landlords in the New York City area. And part of the loans that they dealt with went to rent stabilized or rent controlled units. Important to point out, as our sources tell us, that these rent-controlled and stabilized units are not part of the package Blackstone is dealing with. But nonetheless, how these loans are successfully or not successfully offloaded gives those in the real estate industry a very good insight into what the market will bear right now.